Yo, what's up YouTube? It's your boy K. I'm back again with another video, and on this video I want to talk about what is price action. Okay guys, so you know the drill. Please just read along with me. Excuse me for that. Please just read along with me so that you guys can grasp the information I'm about to share with you guys. Okay, so to start, it says here, what is price action? This is the basic definition of price action trading. When traders make trading decisions based on repeated price patterns that once formed, they indicate to the trader what direction the market is most likely to move. It says here price action trading uses tools like chart patterns, candlestick patterns, trend lines, price bands, market swing structure like upswings and downswings, support and resistance levels, consolidations, Fibonacci retracements, and pivots. Okay guys. So to summarize this, what price action actually is, it's when traders make trading decisions based on repeated price patterns. Okay guys, it's as simple as that. So those patterns that you're going to look at are the patterns that are going to give you an outcome of where the market is most likely to move to. Okay guys, so in order for you to actually know these repeated price patterns, there are tools that you need to use. Tools like chart patterns, candlestick patterns, trend lines, price bands. I don't use those, but then that's my own personal preference. Market swing structure like upswings and downswings, which is when price is in trend. Support and resistance levels, consolidations, Fibonacci retracement levels. I don't use those, and pivots. I don't use those. Okay, the only things I use here are chart patterns, candlestick patterns, trend lines, market swing structure, support and resistance, and consolidations. Okay guys, those are the elements or the tools I use as a price action trader, and they work quite well. They work quite well, guys. I don't want to lie to you. Okay, but then moving on to the next point, it says here 3 important reasons why you should be trading price action. Okay, the first point says price action represents collective human behavior. Excuse me for that. So the point goes on to say human behavior in the market creates some specific patterns on the chart. Okay, so price action trading is really about understanding the psychology of the market using those patterns. Okay guys, that's why you see price hits support levels and bounces back up. That's why you see price hits resistance levels and heads down. Why? Because of collective human behavior. So what this basically says is that as a collective, we are the ones that actually move price. Okay, but to be honest with you guys, as retail traders, we don't move price in any way. The people who move price are the big players in the market. Okay, people like the hedge funds, banks, and all those people who actually take monster trades on the chart. Okay, in the market, I mean. But then what it says here, as a collective, we are the ones that actually tend to move price. Okay, the reason I'm saying this is because if price reaches a support level and we see that as a collective, we're all gonna want to take a buy there. Okay, so us doing that is the reason why price is able to bounce back up from the support and actually start buying, because a lot of us actually took a buy on that level. Okay, so that's how price action works. If you see price hitting a resistance level and reversing from it, just know that there was a collective human there was collective human behavior on that level there. So most people sold on that level because they saw that price was in a resistance level, thus turning price downwards, putting it in a downtrend. Okay guys, so that's how collective human behavior works. Point number 2, it says price action gives structure to the market. The point says here you can't predict with 100% accuracy where the market will go next. However, with price action you can, to an extent, predict where the market can potentially go. This is because price action brings structure. Okay, so if you know the structure, you can reduce the uncertainty to some extent and predict with some degree of certainty where the market will go next. Okay guys, so like the point says here, you can't be 100% accurate. Okay guys, there are times where you're gonna analyze and your trade doesn't go the way you expected it to. Okay, it is normal. It's normal for a trader to take a loss. It just depends on um what amount of loss you take. Okay, so you could find that you don't know how to use a risk reward, then you end up blowing your account because of one loss. That isn't good. But as a professional trader, you're obviously gonna take a risk reward that works to your advantage. So you're gonna lose one to make two or more. Okay, if it's in that case, then it isn't bad to take a losing trade. Okay, guys, and you are going to get losing trades in the market. That's a certainty. Okay, guys, you can't always win in the market. Always remember that. But you can win in the long run. It's about consistency. Okay, guys. So enough about that. It says here, price action can to an extent predict where the market can potentially go. Okay, so we would say like it's a 70-30 chance. Yeah, 70-30 chance. Okay, 70-30 chance of actually knowing where the market can potentially go if you use your elements right. If you have experience and price action, then you have a 70-30 chance of actually taking a winning trade when you analyze. Okay, guys, this is because price action brings structure to the market. So the structure you see, the way price moves is price action itself. Okay, guys, so every time you see chart patterns, you just know that that's price action. Those chart patterns were formed by collective human behavior. Okay, guys, price action is all about collective human behavior, how human beings react to what's happening in the current market. Okay, guys, so it says if you know the structure, you can reduce the uncertainty to some extent. So if you already know the structure you're looking at, you already know what might happen after the structure is presented to you, guys. So this gives you some degree of certainty to where the market will go next. Okay, guys, I hope you understand that. Point number 3 says price action helps reduce noise and false signals. So if you are trading with stochastic or CCI indicators, which I wouldn't advise you to do, guys, okay? There are some traders who use those and they are profitable, they make money, and they are consistent. But then those guys, I don't prefer people using indicators, okay? It's better trading off a naked chart than adding indicators to it, because indicators are lagging, guys. They give you a signal after the market has made the move. Okay, so you always late to a trade when you use indicators, guys. That's the problem with indicators, and most of the time you're gonna get caught up in losses because of the late entries you'd be making every time. Okay, guys, so that's the reason why I don't use any indicator on my chart. It says here they tend to give too many false signals. Okay, this is also the case with many other indicators. Price action helps to reduce these kinds of false signals. Price action is not immune to false signals, but it is a much better option than using other indicators, which are essentially derived from raw price data anyway. Okay, it goes on to say price action also helps reduce noise. What is noise? Market noise is simply all the price data that distorts the picture of the underlying trend. This is mostly due to small price corrections as well as volatility. Okay, so the reason why we shouldn't use indicators is because indicators give you false signals most of the time. If you get the trade right with the indicator, it puts you in the trade late. You open the trade late, guys. Okay, you're always late to the party, and that's not healthy. That isn't healthy, because most of the time you're gonna get caught up in losses, guys. Okay, so that's the reason why we shouldn't use indicators. Okay, but remember, this is just it all depends on you. If you have an indicator that works for you, works well for you, continue using that as long as you make money. The point here is to make money in the market, guys. Okay, be part of the 1% that is profitable. Okay, guys, so I think that's it for today's video. I hope you guys liked this video, and I hope you guys hit that subscribe button, guys. Thank you, guys. Cheers.